Welcome to our MA1 session number 2. This is chapter 2. Today we are looking at Introduction to Management Information. Some of the things that we are going to cover in this session is to look at the difference between data and information, the purpose and features of data and information, sources and categories of data, management accounting and financial reporting differences, and of course the role of the trainee accountant. So let's start with the definition of what data is and how data differs from information. What is data? Data is a scientific term that is used to describe facts and figures, that is raw facts and raw figures. What is information? Information is data that has been processed in such a way as to be meaningful to the person who receives it, or a person who is going to use it. So you cannot use data in decision making, but you can use information. Data is just something that's collected from a survey, and it represents the raw figures or raw facts before they are actually processed into something meaningful. Information, on the other hand, can be described as processed data. Information is processed data that has been processed in such a way as to be meaningful to the person who receives it or the person who uses it. Now, in management information, we learn how to provide information to help managers to make plans or take control measures or make decisions. So primarily, information is provided to managers for managers to be able to make informed decisions. Now, the important part in this area is that the information that is provided to managers should be information that has got certain levels of qualities and characteristics that can actually help managers arrive at a proper decision. If you are going to take a decision based on information provided by someone else, then you got to make sure that the information is good information. So managers use information provided to them to make plans, take control measures, and of course make decisions. What is planning? Managers have to plan the resources that the business will require and how these resources are going to be used. For managers to be able to do that, they need information surrounding certain resources, information such as how much those resources are costing the organization and other things that surrounds that particular information. Control, there must be control over business activities to make sure that managers are carrying out the original plans. So it's when information is provided, that's when managers are able to identify whether the actual activities happening in the organization are different from what the plans or what the original plans were. And so managers can take control measures, meaning that ensuring that everything that is done in that organization is done according to the original plan. Of course, there should be the area of allowing for flexibility in the plans, but overall we have to make sure that whatever we are doing in an organization is something that is in agreement with the plans that are made or were made. Decision making, managers need information to arrive at informed decisions. Decisions can only be as good as the information on which you base your decision. So you have good information, you can actually make proper decisions. So the information that is provided must have certain qualities that, of course, would describe that information as good information. So we look at the qualities of good information. Now, on the qualities of good information, we've got an acronym that actually helps us to remember all the qualities of good information. This acronym is called accurate. So we use that accurate as a mnemonic to help us memorize the qualities of good information. So what are the qualities of good information? Qualities of good information are listed below. Number one, information must be accurate. What that means is that information must be precise, accurate, precise, straight to the point, and that information that is accurate is what will help us or what will help managers to arrive at precise decisions, accurate decisions. Number two, information must be complete. What that means is that information must include all the necessary details that can help managers arrive at good decisions, or anything that can influence a decision must be included. However, we must balance between completeness and volume. There is a limit to what a person can read and understand and apprehend in a given space of time. So when you give reports to the managers, you're not going to give a 100-page report or 500-page report to the manager for him to be able to use it within a day. So information must be summarized. But in summarizing information, we have to make sure that all the necessary details that can influence the decisions are included in the information we provide. Number three, information must be cost beneficial. We must compare the cost of providing information to the value of that information. For example, if you are seeking for directions to come to Zaptac, and then you ask somebody to give you the direction and they charge you, say, 5,000 for that information, the cost of that information and the value of that information may not correlate. The cost is just too high for the kind of information you're looking at. So in an organization, we must compare the cost of providing information to the value of the information that is provided, and we have to make sure that the cost is always less than the value for that information to be cost beneficial. Number four, information must be user targeted. Every time you are providing information, you must have the user of the information in your mind, so that the information you provide is something that is necessary to the needs of the user. So necessary to the needs of the user, and also that the information you provide is something that the user can be able to apprehend or understand. So information must be user targeted. Number five, information must be relevant. Relevancy here means information that we provide must be relevant to the needs of the user. For example, right now I'm providing information to the MA1 students for ACCA, so I have to make sure that the information that I provide is relevant to what my students need. I cannot come to the MA1 students and begin to provide biology information, because that will be irrelevant to their needs. So information that is provided must be relevant. That's number six. Information must be authoritative. The information you provide must carry a certain level of authority for it to be trusted. The user of the information can only trust the information if that information is authoritative, or it's carrying a certain level of authority. And authority can come from trust, skills, level of education, and everything like that. So if you are trusted, you can provide authoritative information, or if you are skilled and everything like that, the information you provide will be trusted, and so the information will carry that level of authority. Number seven, information must be timely. Timely meaning that information must be provided within the time in which it is required, that is, before the decision is taken. Any information that is provided after the decision has already been taken will be irrelevant or untimely. For example, if my students are going to sit for their exams, say, end of next month, August, I can't come to them in October to provide them with information, because that will be outdated information. The decisions would have already been taken. So information must be timely. This means that information should be provided within the time in which it is required. Then lastly, information must be easy to use. That's why you must have the user of the information in mind, so that you make it easy for that user to use the information. As an accountant, as part of your communication may be to managers who are not experts in the accounting field. So to make it easy, to make your information easy to use, you need to avoid unnecessary jargons and big accounting words as if you are talking to your fellow accounting professionals. So let's have let's have the use of the information in our mind so we can provide information that is easy for them to use. Easy to use also means that you have to use certain formats that can easily be understood by the user. So you got to know methods of data presentation that makes it easy for the user to use the information. So in summary, qualities of good information can be summarized in a mnemonic called accurate. So it must be accurate, complete, cost beneficial, user targeted, relevant, authoritative, timely, and easy to use. Now, data and information come from both internal and external sources. Internal sources simply means you are generating data from within the organization. External sources means you are getting data from outside the organization. So some of the internal sources of data could be reports that you request from your workers, the ledger books, the cash book, the accounting reports, and everything like that. As long as it's generated from within the organization, that we say the source of that information is internal source. But if you are going to get information from outside the organization, that is by using other organizations or government reports or gazettes or government registrations, magazines, newspapers, anything that is generated from outside the organization, then we'll say that information is called an external source. That information is coming from outside the organization. Now, in the previous session, I talked about the computerized systems, and the advantages of running computerized systems is that computerized systems are cheaper, easy to use, though you require skills in those areas for you to find it easy to use a computerized system, but they are faster, they are cheaper. You can store large volumes of data when you are using computerized systems than manual systems. Now, computerized systems and the coding structure, these help us to sort information into categories and formats required for both financial and management accounting. Probably coding helps you to sort, it helps you to retrieve information. We'll be dealing with one particular session, that should be session number 5, where we look at coding in details. So information can be extracted and allocated to cost centers, profit centers, and projects using the coding systems. And there are important differences between financial and management accounting. Let's look at some of the differences between financial and management accounting. Financial accounting is used for external reporting mostly, while management accounting is used for internal purposes. Remember, the purpose of providing management accounting to managers is to help managers plan, take control measures, and make decisions. So that's why we are providing internal information under management information. Now, financial accounts is used for external reporting purposes. So when we do the financial reports, we are communicating to the outside world, the shareholders, the public, the government, plus of course the managers can also take advantage of those reports and use them, but the major purpose is external reporting. Management accounting is internal reporting. There is a legal requirements for limited companies to provide financial statements and make them public. There is a legal requirement. There is no legal requirement to provide management information. So the difference between financial accounts or financial reporting and management accounting is that there is a legal requirement to provide and make public financial reports for limited companies, and there is no legal requirement to even make public management accounting reports. Under financial accounting or financial reporting, we have prescribed formats in which those reports are supposed to be presented, and there are also accounting standards or financial reporting standards that should be followed when you are doing financial reports or financial accounts. But for management accounting, there is no prescribed format. The format that is adopted is the format that is best suited for managers or what managers prefer. Financial reporting is concerned with historical data only, while management accounting uses both historical and it's also a future planning tool. So we do issues of forecasting in management accounting, looking to the future, while financial accounting or financial reports is only concerned with historical data. So with financial reports, you are dealing with what has transpired in the past period, but management accounting looks at both historical and future planning too. Financial accounts usually includes only financial information. Management accounting includes both financial and non-financial information in it. Financial reporting or financial accounts only includes financial information. Management accounting includes both financial and non-financial information. Financial accounts show results for a defined period of time, usually 1 year, which is called the financial year or financial accounting year, while management accounting results can be presented at any time, because the whole purpose of management accounting reports or results is to help manager come up with decisions. So that's the whole purpose, meaning that at any given point in time, management may request for management accounting information to help them make decisions and of course plan. So management accounting, we've already talked about these. Management accounts are used for internal purposes only. There is no legal requirement. There is no prescribed format. It uses both past and future data. It uses also both financial and non-financial information. And the whole purpose of management accounting is to provide information to help managers plan, control, and make decisions. What's the role of a trainee accountant? The role of a trainee accountant is to provide information to managers, for managers to make decisions. So a trainee accountant answers questions like, how much are the costs of making a unit of a product, or how much is it costing the organization to run a department, how much are the costs, how much are the revenues gained from this and that. So those are the questions that a trainee accountant is supposed to answer, and those questions provide information for managers to make decisions. Trainee accountants are not in the position to make decisions, but to provide information to the decision makers, or are managers. So the organization must have a cost accounting system capable of analyzing cost information quickly and easily, and that's where a computerized system of course comes in, and the use of spreadsheet comes in there. We've got our chapter 11 where we'll talk about the use of spreadsheet or Excel to make it easy for management accountants to provide that particular information. So examples of questions that are asked to trainee accountant: what was the cost of producing these goods? What was the cost of providing a service? What were the costs of operating a department this month, and what were the sales last month? So trainee accountants are more like account clerks who adds up all these figures and then give the information to managers, and it will be up to the managers to make those appropriate decisions. So that brings us to the end of this session number 2, chapter number 2, management, introduction to management information. In our next chapter, chapter 3, we'll be looking at cost classifications. That's the cost unit, cost classification, and profit reporting. There is a video that is already on YouTube talking about cost classification. You can make the best use of that video. Thank you for your time.